I mean, first take is, are you pretty impressed with the iPhone print in this quarterly results?
Yeah, thanks a lot, Wolf. Look, I think this is kind of a sigh of relief quarter, it seems like, for Apple. You're right that this is an iPhone company still, and iPhone revenues were better than anticipated. I think a lot of people anticipated that the company would disappoint, especially ahead of an expected iPhone 14 release. And so the company being led by iPhone performed better than expected in the quarter.
So does that mean if a recession comes and is harder than expected in the US, there's still the iPhone print to tail off, or does it just show resilience of the iPhone earnings almost no matter what?
Yeah, it was surprising to me the extent to which the company seemed to indicate that they weren't really seeing the impacts of the uncertain or recessionary economic environment in terms of demand. I think a lot of people anticipated that Apple would be a lot more impacted and a lot more conservative in terms of how they talked about that. But clearly, the fact that they didn't provide forward guidance, and we don't really have a sense at this point of how their fiscal first quarter is shaping up. That's the December quarter. The holiday shopping season is obviously critical, but people probably should be encouraged by hearing some of the positives coming out of the quarter, particularly the fact that demand seems pretty resilient, notwithstanding some issues related to consumer sentiment and spending.
In terms of the overall valuation, I mean, revenue growth was only 2% year over year, and in fact, earnings declined year over year. Does that justify an over 20 PE? What PE do you have it on your numbers?
Yeah, look, I mean, we focus on the fundamentals when we're talking about things at Third Bridge. And what I would say is that the size of the revenue base, the diversification of the business mix, and I think, as we were just talking about, the resiliency of the brand and the performance, I think should probably give investors a lot of confidence, frankly, which is something that not a lot of people probably felt when they considered Apple and a lot of other similarly situated companies over the last couple of months.
Okay, wildcard question for you, Scott. I mean, clearly they've got a massive war chest, a massive cash balance on the balance sheet, and a lot of tech companies have declined sharply, much more than they have so far year to date. Should they be considering buying someone even as big as Netflix?
Wow. Yeah, look, I mean, those conversations will come and go. I'd point out, I think they spent $28 billion buying their own stock in the quarter, a quarter during which the stock fell 20%. So it seems like they see value there. Apple is a company that historically has not done a lot of larger deals, and frankly, the larger deals that they have done haven't been particularly well received or executed upon, according to many. So while it could make sense for the company to make a move given the current environment, past if its prologue would suggest they're going to stick to their knitting, continue to invest in R&D, and buy back their own shares.